Hello everyone and welcome on this new weekly market analysis video from Xtreme Trader. This is Salah speaking. Before we start, please don't forget to hit the like button and subscribe to the channel and kindly leave a comment and share the video. So as usual my friends, let's now begin analyzing the EURUSD and let's now move to the weekly chart. So of course, as you guys all know, our style here in Xtreme Trader is to always analyze the market based on the weekly and daily chart to confirm the direction of the market. Once we do that, we will switch to the smaller time frames such as 4-hour time frame or even 1 hour to find the exact entry. So first things first, let's now go to the weekly chart. So now based on the weekly chart, let me just first of all squeeze the chart like this, or lowering the price scale, so actually it can gives me actually a better perspective on the market. Now what we will do right here is simply apply the magic of trend lines. And for the new followers, this is actually a strategy that I'm using on my channel, and I have tons of videos explaining how to apply the magic of trend lines. So it's basically like this. You will just draw the resistance trend line, as you can see, just like this. Now what you will do is simply drag and drop the same line, and you can see that the market has always all the way been respecting this level of a resistance trend line. I mean, even on a support trend line, you will see that the market has always been respecting that area, as we can see right here. So what we will do right now is simply draw the resistance, or actually drag the same line right here, and just simply place it right here at the key level of a support trend line. Check this out. So right here we can see clearly that we had also a support trend line. Then after the bearish breakout became a resistance trend line number 1, number 2. Then after the bullish breakout happened, the market actually since January 2023 kept respecting the same level as a support trend line. Even with the recent attempt right here, the market actually reversed right on that level. So meaning the market is actually under a lot of pressure and respecting this area here of a support trend line. Not only that, but let's take a look at the price action, which is really important. This price action, my friends, the inverted hammer, once you spot this price action of the candle, especially if it's a bullish one, on the support trend line, it actually confirms that the market is actually tempted to make a bullish reversal. We can just see right here another candle with the same price action, and as we can see, the next one was bullish candle. Another example can be seen right here. Once we spotted the same candle, the next candle was also another bullish candle, and we can see the same right here again. After the appearance of this candle, again the next candle was bullish as well. So as we can see, this price action is really trusted, and I personally use it in my day tradings. Therefore, from weekly chart we can say safely that the EURUSD seems to be bullish for the upcoming week. Let's now move to the daily chart. Now here on daily chart also we can notice that the market has actually started the week with a strong bullish candle, and it seems like the market has already reversed from this level of a support. Not only that, but we can see here also inverted head and shoulders pattern that has already been completed. Therefore, EURUSD seems to be going to the rise for the upcoming week. And that being said, we can actually highlight that here we have, of course, a real level of a support that most likely is going to be also retested. So right here we have a real level of a support, then fake breakout candles, and then here finally the fake breakout candle, and then again Tuesday candle has actually retested the same level of a support again. Now, daily and weekly chart has confirmed that the market seems to be bullish. Let's now move to the 4-hour time frame. Alright, now here is the 4-hour time frame. Now what we will do is simply, of course, apply the Fibonacci retracement, just like this, to find our decent entry and to find the real level of a support. Then exactly we can notice here at 1.029 that the same level indeed was a strong key level of a real support all the way, and then we have here two major fake breakouts on that level. Therefore, what we can do next is simply buy the EURUSD exactly when it falls down to test the area at 1.029. If we spot here, of course, a bullish reversal, we can start buying the market right here, targeting, of course, the nearest level of a key resistance right at Fibonacci 61.8. So therefore, we're actually going to be aiming this level at the resistance right here at 1.041, expecting around 120 pips of profit. And in this case, our safe zone shouldn't actually be ranging much lower than the previous level of a key support as well at 1.025, which will be ranging for only 38 pips only. There goes our new deal for the EURUSD, my friends. Let's now go to the Pound USD. Alright, so pound USD again. Let's now move to the weekly chart. We can see the similarity right here with the Euro USD. Again, the market is actually ranging right here at the real level of a support, as we can see, with two major fake breakouts from that area. However, we can see the same price action has appeared right here on the support level. So again, the same price action of the inverted hammer can tell us that the pound USD seems to be bullish for the upcoming week. Therefore, we will consider buying this pair based on the weekly chart price action and the fact that it's actually on a support zone. Moving now to the daily chart. Here is again daily chart, and it's again, guys, we can see the similarity really with the Euro USD. I mean, it's just boring to just repeat myself, so I will just go directly to draw the Fibonacci retracement, and we can see. Let me just wait a minute. I need to go to the 4-hour time frame to be able to draw it in the correct way. Right here exactly, precisely, right here exactly at the same level of a real support from the real level of a resistance. So therefore, we can see that actually it actually might not be a bad idea to buy the pound USD after it dropped to another 80 pips, which is gonna be really a lot. But I mean, this is what the setup is giving us. I cannot give any better entry than this. Again, another reason for this entry is actually the support trend line that can be seen right here exactly. Check this out. So right here, of course, based on daily chart, we had, of course, a support trend line that after the bearish breakout candle, the market actually respected the same level again. So the pound USD right now is actually below 38.2, and there is a possibility that the market will continue the fall till it reach the same level of a support trend line. I know this signal might take really long time to be activated. We're talking about around 75 pips, but it is what we can give actually, my friends. And another confirmation, as we can see here on the left side, that the market actually has here formed a strong key level of a real support. Yes, that's going to be my entry for the pound USD, targeting again the highest level of a real resistance right here exactly at 1.252, aiming around 200 pips of profit, and hopefully the safe zone won't be that big actually. Let me just now go to the 4-hour time frame. Yeah, the safe zone can be just ranging till the lowest level of a real support at 1.226. Within it will be ranging for only 58 pips against 200 pips of profit. And that's gonna be all for the pound USD. Let's now jump to the AOD USD. Alright, so now let's move to the weekly chart on the AOD USD. Here we can notice, of course, that the market has indeed respected the same level of a real support as 0.620. Now we can see that the market also, based on the price action, last week has actually ended the week with a strong bullish engulfing candle, and that means that the AOD USD also seems to be bullish for the upcoming week. Now, based on the weekly chart, I can tell that here we have actually a real level of a support, faced with two fake breakouts from that area, but we need to go to the smaller time frame just to confirm. Let's now move to the daily chart. Alright, here daily chart actually, let me just now squeeze the chart again just like that. So now we can actually see that the market actually has been testing the support at 0.620 for really so long, since the whole year. I mean, since December 12, the market is actually respecting, or actually retesting the same level of a real support, and there is a lot of pressure to actually make a bearish breakout from that area, but the AOD USD is failing so far. So most likely the pair is gonna continue the rise for the upcoming week. Why am I saying that? Let me just now take you to the 4-hour time frame to show you this. So here, based on the 4-hour time frame, we can notice here exactly that we had also a support trend line. Check this out. Now, it seems, let me just make it accurate like this. So it seems like the AOD USD is actually respecting the same level of a supported trend line. Then finally here we had another fake breakout from that level, barely an attempt of a resistance trend line, and instantly broke out from that area. So therefore, if the AOD USD will fall back, it will face a lot of pressure right here. First of all, starting from the support trend line, ending with the horizontal level of a real support exactly right here, to be precise, right here exactly. As you can see, this level was also a strong key level of a support in the past, and a resistance as well, and even a support right here. Now, to find the exact entry, we need to use Fibonacci retracement. Let's do that. Check this out. Our entry is exactly at Fibonacci 61.8. I swear I didn't test it before recording. I just looked at the market, and just from my knowledge in reading the charts, I was able to find a good entry, but I wasn't actually sure it's going to be 61.8 to be honest also. Anyway, the market is finally above 61.8, and if the AUD USD will fall back, it will surely reverse right here. Or actually, let me just not say surely, it will most likely reverse at the same level at Fibonacci 61.8. Therefore, let's wait for the AUD USD to fall to another 33 pips before we can start buying it, targeting the highest level of real resistance at 0.632, aiming around 90 pips of profit, and a safe zone that shouldn't be ranging much lower than the bottom of a real support right here exactly at 0.619, which means our safe zone will be ranging just for 37 pips against 90 pips of profit. And that's gonna be everything for the AOD USD. Let's now move to the USD CAD. So finally, USD CAD is giving us a clear reading. If you remember, guys, over the last 2 weeks, I actually stopped analyzing this pair because it was actually stuck right here at the level of a resistance. And I wasn't really sure what's going to happen next, if the market will make a bearish reversal or a bullish breakout. So finally, we have here a clear reading that seems like the USD CAD is actually unable to make a bullish breakout from this long-term resistance at 1.464. Based on the monthly chart, right now we are talking about monthly chart, the resistance is actually holding the position since 2015, then again 2020 retested again, and finally 2025 again is being retested. So again, AUDUSD seems to be bearish, for the upcoming week. Let's now move to the daily chart. So daily chart here shows us, of course, a real level of a resistance right here exactly at 1.445, and meanwhile here we have, of course, a fake breakout happened. I believe this was due news or something. Mr. Trump maybe said something about, I'm not really sure what happened that time, but however, it tells us that the USD CAD is actually facing here a strong bearish momentum. Now, as you can see here, this is really interesting. We had here a strong bearish candles, but then the recent 3 candles are weaker. Why are they weak? Because, of course, they are right now at the lowest level of a real support right here, and the market won't easily just break out from that level. But again, it most likely gonna break out finally. So let's now move to the 4-hour time frame. Now, based on the 4-hour time frame, we can notice here, of course, that we had a broken level of a real support right here exactly at the bracket of 1.436. It already became here a resistance. Now, the interesting thing here is that we can see here also a head and shoulders pattern has been appeared. If I just zoom in so you can see it right here exactly. So now what we can do next is simply draw the Fibonacci right on this level only. No need to draw the Fibonacci on the bigger time frame because it's just gonna be way too much. I mean, we don't want that much. We just want to draw it right here exactly because I'm not expecting from the USD CAD to be actually able to go above this level of a resistance. Most likely, due to this strong bearish movement, the USD CAD will just simply continue the fall. That being said, and judging on the Fibonacci that we have here, we can most likely sell the USD CAD again at Fibonacci 61.8, which was, of course, a real level of a resistance at 1.432. Right here exactly. So let's wait for the pair to rise again to another 40 pips before we can start shorting it. Now, for the sell, for the take profit level, based on the current chart that we have right here, we can notice that the nearest level of a support lies exactly right here at 1.421, and that means that we can actually aim around 115 pips of profit with this signal, and the safe zone in this case that shouldn't be ranging higher than the previous level of a real support at 1.436, and that means that our safe zone will be ranging for only 40 pips again, 41 pips against 118 pips of profit. And that's all for the USD CAD. Jumping now to the USD JPY. Alright, so now what's next with this pair? USD JPY, my friends, is actually facing here a strong bearish momentum right now. And from my point of view, this pair is actually going to continue the fall till it reaches the strong key level of a support right here at the bracket of 150. Why am I saying that? Let me just tell you something here. Let me just now go to the daily chart. So right now, let me just now first of all squeeze the chart. Again, this is really giving us a better perspective on the market. So now what we can do right here is simply looking at the chart, the channel that we have right here exactly. Now we can just basically just complete the channel just like this. actually like this to be precise. And as you can see right now, the USDJPY most likely will continue the fall till it reach the same edge of the support trend line. Actually, to be even accurate, it's like that, to be honest. Yeah. So most likely it will continue the fall till it reach not only the edge of the support trend line, but also to retest the real level of a support right here exactly at 148.820. Therefore, the USDJPY most likely will move like this and then reverse exactly right here, and most likely it will make finally a bearish breakout from that area. So therefore, we are actually aiming this movement right here just till the USDJPY fall again and reach the same level of a support. That's going to be our entry, or actually trade, for the upcoming week, because here of course we are talking about daily chart. So USDJPY seems to be bearish for the upcoming week. Let's now move to the 4-hour time frame. Now here 4-hour time frame shows, of course, let me just again do like this. Now here of course we have a strong key level of a support, real level of a support, as you can see right here at 152.061, a real level of a support that indeed has been respected right here, became a resistance number 1. Now our target is actually to retest the same level, or actually to resell at the retesting of the same level right on the second attempt of the resistance. Therefore, we will sell exactly at the resistance number 2 and target, of course, the strongest key level of a support right here, which is also the nearest one to our entry. Let me just highlight it right here exactly to be precise, exactly at 149.880. Therefore, our target is going to be around 220 pips. Again, guys, we are talking about USDJPY here. A small candle can give us a lot of pips. And then our safe zone shouldn't actually be ranging higher than the previous level of a key resistance right here at 152.695. And that means our safe zone will be ranging for around 63 pips only against 220 pips of profit. Let's now finally move to the USDCHF. So right now USDCHF, and let's now go to the weekly chart again. So here weekly chart again, my friends, showing that the USDCHF is actually facing a strong key level of a resistance at the bracket of 0.909. Not only that, but also weekly chart price action is actually a hammer, which actually indicates a continuation in the bearish fall. Therefore, USDCHF seems to be bearish for the upcoming week. Let me just make it short for you, my friends. So right now the current price action here, as you can see, is actually head and shoulders pattern, and seems like the USDCHF will reverse exactly right here very soon at the same level of a resistance. So therefore, moving now to the 4-hour time frame and simply applying the Fibonacci retracement, aiming, of course, the real level of a support right here, we can notice that the USDCHF is actually facing here a strong key level of a resistance at the bracket of 0.912. So right here, of course, we have a real level of a resistance multiple times, then a fake breakout, then again another real level of a resistance, then 1, 2 fake breakouts. So now most likely the pair will respect the same level at Fibonacci 61.8 and afterward continue the fall. And the last confirmation will be by using the magic of trend lines. And as you can see right here exactly, let me just make sure, let me just make sure it's clear for you. Oops, 1 second, like that, from the beginning of the chart right here exactly, and again squeezing the chart like this so we can have a better perspective. Now check this out, right here exactly, we have a supported trend line that actually has faced here multiple fake breakouts and became here a support trend line. Then finally, after this major breakout candle from the same area, the same level of a real support trend line will most likely now become here a new resistance trend line. Why am I saying that? Of course, because on the weekly chart we are actually on a very strong key level of a resistance. That being said, USDCHF most likely is going to be good to be short exactly right here once it retests the Fibonacci 61.8, targeting, of course, the lowest level of a real support at 0.902, expecting around 102 pips profit with this signal, and a safe zone that shouldn't be ranging higher than the peak of the real resistance right here exactly as 0.916, which will be aiming for around, ranging for around 43 pips. And that's gonna be everything, my friends, for the upcoming week. Again, don't forget please to join our free channel of Telegram to receive all kinds of updates about these signals that you are receiving here on YouTube. This is the channel here, Xtreme Trader Signals, and you can also find the link in the description below of this video. And here is, of course, the link of our support, where you can contact them to join our VIP Forex signal service. And by the way, guys, we have recently noticed a lot of scammers using our name and logo pretending to be Xtreme trader. The only reason they do that is to use the successful rate and the successful reputation of Xtreme trader. If we are providing a bad service, no one will bother to copy us or to use our name and logo, right? So if you just search Xtreme trader, you will find really a lot of people using our name and logo. So please, my friends, be aware about these scammers. Do not transfer them any money. The only really channel of Xtreme trader is this one right here. Just make sure it's exactly the same link, Xtreme Trader Signals. So until then, my friends, I hope that was informative to you, and I would like to thank you for watching.